Friday, April 1st, 2022, Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Weston Nakamura. Weston was born and raised in New York. He moved to Tokyo with one suitcase. He was hired by Goldman Sachs off the streets, literally, he says, to trade futures, options, and listed derivatives. He moved to Jefferies, Japan equity sales, and Japan macro hedge fund sales. He's a professional dot connector, lifelong experience in being a clown. That's one of the reasons I enjoyed watching his video from February. He talks about serious things, but he's funny too. So, interestingly, Weston and I have kind of the same background because I was a futures and options broker listed, and we spoke about how we didn't like trading JGB futures because there's such a big future, and there you can make a big error there. So, Weston, welcome, and I wanted to ask you, so the viewers can know how important the Bank of Japan is. So maybe you could give us a little background on the Japanese economy, the Bank of Japan in the last 30 years, and their also maybe Abenomics.
Yeah, sure. So, first of all, thank you, Mario. Indeed, I'll correct one thing. Goldman didn't hire me off the street. They hired me out of maybe a capsule hotel that I happened to be sleeping at the time. So there's a
You put that in your
yeah. Because I
you
moved
put
here.
it in you put it
I
in
moved here.
brackets.
Right. I moved here with basically, with basically nothing, but I was kind of hopping around. But I wasn't sleeping on the street. I was just sleeping in seedy hotels and here there. So, but yeah. So, yeah. And it was funny how you and I were talking about trading JGBs, and how massive the notional contracts are and all that. Brought back some fun memories. But yeah. So, the thing with the Bank of Japan, the reason I made that particular video, so I currently. I work with Real Vision, and what I do is kind of different from what most of the Real Vision staff does, which is that, they're journalists and they interview people. But for me, I put out a view, I do analysis, I trade, of course, and I just put out original content myself. And so I kind of pick more or less what it is that I think is important relative to how much attention it's getting, by the broader either media or just consensus in general. And what is consistently being overlooked is the Bank of Japan, which is just astounding to me because just let alone what they're doing. We're talking about, this is the third largest economy in the world. We're talking about a G5 central bank. You don't just have a major central bank just go into invisibility. So I was flagging the fact that people were ignoring the Bank of Japan in and of itself is significant, because if everyone is focused on just all eyes on the Fed, and you're not looking at something major it's kind of like, it would be like if you're ignoring the Bank of England or the ECB or something, and then they'd make a policy change. That's when you see trillions of dollars suddenly have to reprice and shift around. And we kind of saw that this week. So the BOJ is a very, very significant and consequential central bank. And the reason is fundamentally because, as I described in my video, and thank you for, by the way, talking about my video and mentioning it to your subscribers and all that. But what I talk about is that segment when I'm standing in front of the actual Bank of Japan. What I say is that the Bank of Japan, the reason that the Bank of Japan is so significant, if not the most significant, and arguably, if not just the most significant central bank, but one of the most significant institutions in the world, period, is because, if you believe that central banks have the ability to shape the society in which we live by allocating capital and resources to, how much and where and when and all that, if they can influence and impact politics from a top-down level, if they can, create wealth divides, if they can crash and save economies, and so on. If you believe any of that, The Bank of Japan is the most important one of the central banks because it's the laboratory for other central banks. So the Bank of Japan leads other central banks, major central banks, the Fed, the ECB, the Bank of England, the Reserve Bank of Australia, so on and so forth. And they lead them in policy framework by roughly 10 years or so. And that's because Japan leads the world in debt and demographics by about 10 years. So it's not like, this is not an enviable position that BOJ is in, but they are forced to take what's considered at the time extreme radical measures, only to have them adopted by other fellow central banks thereafter. So you take dropping rates to zero and staying at the zero bound, for example. BOJ was there in 2000. BOJ basically invented QE. That was, again, a decade or so before 2008 and all that, when the other central banks kind of, came in line. The Reserve Bank of Australia, they had their dabble with yield curve control 5 years after BOJ, unveiled that policy. Yield curve control, by the way, was designed in part with the help of Mr. Ben Bernanke after his tenure at the Fed, literally flying over to Tokyo in 2016 because the Bank of Japan is the central banker's laboratory. This is where you experiment. This is where you do things, and every other central banker watches the BOJ very carefully to see what to and what not to do for when it comes time for their economies to have to, in their thinking, continue on with top-down monetary policy, sort of controlled regimes. So that's just the fundamental significance of the Bank of Japan. And then in terms of the historical part of it, so there was this massive, as you've covered before on your channel, there was a massive asset bubble in the late 80s in Japan. That you citing the Imperial Palace grounds having more real estate value than all of California. There's another funny one. It's something like if there was like a 10,000 yen bill, so basically the equivalent of like $100 bill, USD bill, on the ground in central, the Ginza district, was like a ritzy district, that plot of that square plot of area where it would have landed would be worth more than the bill itself. Clearly a bubble is my point, right? And so it was a massive asset bubble, and that bubble burst, and then Japan has not recovered from that from 3 decades ago, and has been in a state of perpetual deflation since then. And then come 2013, then Prime Minister Shinzo Abe appoints current Bank of Japan Governor Kuroda to essentially launch Arrow 1 of his 3-pronged Abenomics arrows. So Arrow 1 is monetary policy, Arrow 2 is fiscal policy, Arrow 3 is structural reform. The latter two just never really came to fruition. The first one, however, that they took action on that. So 2013, April 2013 is when Kuroda started. But from the point when he was appointed until the peak, basically dollar yen made close to a 50% move from the mid 70s, 80s or so to up to 120, 125 or so. You had a massive stock rally, stock market rally. You had JGB yields cut, into negative territory eventually. But so all of that, I guess if you want to call it financial alchemy, was working. Corporate profits were booming, so all of that part was fine. There's no inflation, though. There was really nothing happening on that part, and that was the entire point. 2% inflation in 2 years is what they said. That was in 2013. It's been 4 times longer than that, and they haven't gotten close to that 2% level. Even now, with global inflation. Now, it's coming. That's a different story. But, if not for that, if not for commodity prices and all that, Japan would still be mulling around this 0% level, after having blown the balance sheet up to well over 100% of GDP. And Japan is currently the Bank of Japan is by far the most aggressive and sort of in the hole, unable to turn back deep in with their policy than any other central bank by far.
Yeah, and when Abenomics started, 2013, 2014, 15, that period, that was also when the Federal Reserve was trying to take the foot off the brake. So it was quite convenient for the BOJ to take up the slack. And one
There's also
question,
the ECB kind of taper tantrum as well, a little bit like that going on too. Or I'm sorry, not the ECB. There's the Fed, yeah, taper tantrum. There was the ECB European debt crisis, also kind of
yeah, just
both at the same
before
time.
that, yeah.
Yeah.
And when you say there's hasn't been deflation, uh, you know,
Inflation.
there hasn't been inflation, but that it's been below 2%. I have looked, for example, at the price of gold and yen, and the yen has been dropping and gold has been rising, like from around 60,000 in 2008 now to recently to almost 250,000. How is it on the ground in terms of the cost of living? Because I'm sure maybe in Japan as well, they tinker with the CPI data.
Yeah. Tinker or otherwise. I mean, like, I just personally find it baffling that economists or policymakers will distill all goods into one single number. I don't care if they tinker with it. Like, it should not be one single number, right? But yeah, so CPI is not a real reflection per se of, like, I guess, like, living
Yeah.
costs. But I will say though, there is a unique culture in Japan in which, like, certain kind of retail products or retail stores, like, you really cannot increase prices. Like, it's very very ingrained. 10 yen more and you'll lose customers. Kind of like how gasoline, like gas stations, they kind of fight over like fractions of a penny, and people will go. It's kind of that sort of
I
mentality as
see.
well.
And
But there are costs of living that are certainly,
yeah,
like Japan is not immune to commodity price increases,
yeah,
and so yeah.
yeah. The other thing that I've always thought, if the Bank of Japan and not just them, but the other central banks, if they didn't manipulate interest rates lower, and seeing that you have the demographic situation where the pensioners have a big savings pool. If you had, let's say, 4 or 5% interest rate in Japan, uh, I mean, and Mrs. Watanabe, for example, could get 4 or 5% on her money. I think that would lead to more growth, and I think it's a huge mistake by the central banks. But what do you think about that?
I would agree with you, that the savers, the pensioners, the people that need yield are being deprived of yield,
Yeah,
certainly.
yeah, yeah,
However, you're talking about the most indebted by far, the most indebted country in the world. So you're talking about 250% debt to GDP. If you have, borrowing costs at 5%, that exceeds the entire budget is on interest
yeah.
payments.
That's the problem. They've dug themselves into a hole, and maybe in the West we're 10 years behind, and we're gonna get there too. Um, what happened this week was really interesting because we're seeing the Western central banks shift policy. I mean, the Fed has been warning since June last year. They finally raised a measly 25 basis points recently. And the Bank of England has raised. Even the ECB is talking about tapering. A lot of central banks are becoming more hawkish, mainly because of the rising CPI. So explain to the viewers what happened maybe this week when JGB yields, I think it was Tuesday, they were racing ahead. The yen was like reaching 125, which seems to be like a line in the sand. Like when you look at Abenomics,
Mm-hmm.
we went from below 80 to 125, and that's a bad thing for the yen. It means the dollar is rising, the yen is falling. Yeah, can you go over what happened this week? And you were quite serious in your video in February about what could happen. That if Kuroda blinks or sweats, the whole financial system in the world could be in trouble.
Yeah, what I was talking about was because he just giggles all the time, as if he doesn't. It's almost like he doesn't know the gravity of his job. um, but again, like I was saying, I don't know if it's act or whatever, but I think it's kind of saved Japan and saved financial markets because he's carries the weight of so much on his shoulders. So essentially, this is what happens is that Bank of Japan. So before again to this week, just explaining the background of what yield curve control is. Because that's the policy that's in place that's in contention right now. Yield curve control is again, this is helped designed by Ben Bernanke, but what that is usually central banks they tinker with the front end, the policy rate, the very front end of the yield curve, Fed funds rate, whatever it is. So the BOJ has the policy rate at minus 0.1%, so it's a negative rate. Then, in addition to that, what the Bank of Japan is doing that's very unprecedented is that it is pinning the 10-year yield, the long end of the curve, the 10-year yield, JGB yield, at around zero. And they do that by just whenever yields get too high, in this case it's 25 basis points is where the upper band is, they will step into the market directly and intervene directly and offer to buy an unlimited amount of JGBs, and that basically you have an unlimited printing press, you have an unlimited sort of bid for JGBs, and that in theory should cap yields, and thereby keep the long end of the curve down. It is market manipulation, if you want to call it that. It is, if you want to call it socialism, I don't care what you want to call it, but it is clearly not any sort of a free market sort of moving thing. This is what they're explicitly doing. So when that happens, what happens is that because we were saying the Mrs. Watanabe is they're sitting on trillions in cash, they're in need of yield, and they're not getting it in Japan, and so they look for yield overseas, like in U.S. Treasuries. And so what yield curve control does is when Bank of Japan pins yields down at around zero, trillions in Japanese capital goes overseas and buys things like U.S. Treasuries, thereby indirectly capping U.S. Treasury yields. So it's kind of like a yield curve control on other sovereign curves, not just on Japan, which is very significant because now you have a low rate environment that is being aided and abetted by the Bank of Japan and the enormous firepower and capital that is being exported out of Japan. And when you have a low yield environment, you have things like tech valuations, tech stock valuations go through the roof. And you have also other implications, like I was saying about how governments, Congress, whoever, get to run up absurd deficits because borrowing costs are so cheap. So there are many sort of like these other like implications, right? So that's basically been going on since September of 2016. So now you're in a situation. The significance of this week was that right now, you now have a situation where every central bank, except for the Bank of Japan, every economy really, except for Japan at the moment, is experiencing, inflation. And therefore, central banks need to tighten their policies, and they need to start raising rates, often lifting off of zero, and stop buying bonds and all of that. And they need to do that in order to combat inflation. But when you have a policy divergence like that, first of all, when the Fed, the ECB, whoever is starting to become more hawkish, that causes yields to rise, and when yields are rising, JGB yields are also going to rise. And if Bank of Japan is capping the 10-year JGB yield, the yield spread between, say, U.S. Treasury 10s, the 10-year U.S. Treasury yield, and the 10-year JGB yield widens. And as that widens, dollar yen, USD JPY, will move in tandem with that. And so when you see a 8% move in USD JPY upwards in the span of less than a month in March, that is a reflection of that yield spread widening because the Bank of Japan has been very staunchly defending this yield curve control policy. And this week, what was unprecedented was that they announced on Monday, they announced two what's called fixed rate operations where they're offering to buy an unlimited amount of JGBs. And then after market close on Monday, they said from Tuesday, Wednesday, and Thursday until the rest of this fiscal year, Japan has a fiscal year until the end of March, the Bank of Japan is going to offer to buy an unlimited amount of JGBs to cap JGB yields. And what I was saying that was what was so precarious was that if they were unable to do that, if they were unable to hold the line, and if the markets kind of burst out of that range, out of above 25 basis points, it would be kind of like akin to like a George Soros versus the Bank of England situation, in which if markets think that the Bank of Japan actually does not have the firepower, you could have seen an enormous rise in global sovereign yields, and then that would have crushed risk assets and all that, and would have had huge volatility implications across assets. So we seem to have got over this episode of it, but by no means is this over.
Mhm.
This is just over for now.
Yeah, and I see this morning that JGB yields are down. I mean, the 10 year is back down to like 0.2. But the Treasury curve, for example, I've got the 2 year now up 12 basis points, which is huge at 2.405. And then the 10 year now is up 9.4 at 2.42. So we're almost inverted again. We're almost flat. Uh, and yeah, I mean, maybe on Monday, JGB yields might start rising again. Is the market closed right now for JGBs?
Yeah. Well, so they extended JGB trading hour. It used to close at 3 p.m., but they extended hours. But right now, though, you are so this is the new fiscal year as of
Yeah,
today, in Japan. But we're also like ahead of, I think that you have like European like um CPI readings coming out. You have like non-farm payrolls coming out. So
yeah,
usually it's kind of a light trading day. I think that there's probably like waiting to see how that comes out. So like right now, as we're recording this at this moment,
yeah,
I don't really look too deeply into the price action. I think it's
yeah,
pretty interesting that JGB yields are the ones that are falling and everything else is
yeah,
rising.
yeah. And I
But
noticed that. Sorry,
yeah,
I noticed that the dollar rose to like 125 earlier this week, and it reversed
yep.
quite sharply. But today we're back to like 122.50. Any views there on the dollar yen?
Yeah. I mean, so I think that look the so the longer that or the more staunchly, I suppose, that the BOJ is committed to capping yields, and as other sovereign yields rise, the weaker the yen is going to fall. So if you see like Treasury yields, at like say 3%, which is not out of the question, we were at, like we were far below that just at the beginning of the year, or far below, two at the beginning of the year. So let's say like at 3%, you could see dollar yen through 130 and all that. So yeah, I mean it's just a matter of that yield spread, and then you're also getting not just like levered hedge fund speculation activity with shorting yen futures and all that, but Japanese retail is now it is the most like it's net long USD versus JPY on record. And so there's a lot of people betting against or betting on this continued sort of this yield spread to widen out further and further.
Yeah, one question I have is like I think the BOJ now owns half the JGB market. It could be I could be wrong, but I think it was 4 years ago it was like a third when you put that interview of Kuroda at Davos. But what could really,
Right, that's right. Yeah.
yeah, does I mean is there a point where the BOJ actually can't do this anymore, or are they, all powerful and they can keep doing this? What? There's no such thing as a free lunch, as we know. What could scupper this whole policy, and what could the consequences of that be for the whole financial system worldwide?
You're asking a very very difficult question that we all we all wish we knew the answer. So but that is the most important question though. This is why central bankers have all eyes on the Bank of Japan, because of what BOJ is doing, and if they see that in their future at some point, they're looking at it's kind of looking into the future, if you will, except what BOJ is going to do is going to have real time consequences. So look, the BOJ it currently owns a little bit over I think half of JGB's outstanding, but really like when you own like more or less around half of issuance and effectively have killed the actual secondary market, There are days where JGB there's zero trades on JGBs. JGB market used to be the second most liquid, vibrant market, second to only to the U.S. Treasury market. It is effectively dead now. So whether it's 40% or 60% or whatever it is, or 80%, I don't really see too much of a difference. The Bank of Japan has cornered the JGB market. And so what that means is that first of all, you have obviously insane price distortions. Like, explain to me how it's possible that the country with the most, 250% debt to GDP is able to borrow cheaper 40 years out than the risk-free United States government can for a 1 year out. It's clearly these are price distortions that are happening as a result of this acquiring of JGBs. Now, can they keep doing it? I think that they have to keep doing it at this point, because if they start selling into a market that they've destroyed, that no longer exists, global yields are going to explode higher, and you're going to have markets implode. But there has to be some sort of end game at some point. And so this is like another video that I'm actually working on, my kind of sort of end game theory. But I believe that, and I won't get too much into detail about it, but I think that at some point, I think that the Bank of Japan, what they're trying to do is they're going to try to amass as many JGBs as they really kind of need to, and they're going to attempt to cancel the debt in one way or another. Basically, if the Ministry of Finance owes the Bank of Japan principal, as opposed to investors scattered around the world, Japan would be defaulting on itself. So I like how, when, what the repercussions are. Who knows? But what I can say is that that is far more likely a scenario than for the Bank of Japan to unwind, and far more likely of a scenario than for Japan to be able to pay back the principal on its debt. Like, Japan will default on its debt. So it's just a matter of on who and how.
Yeah. The thing is, like, if they do that will mean a destruction of a lot of the money circulating in the economy. So it will actually be really deflationary again. They're really in a quandary, I think. And do you think then this is the future for the Fed, the ECB, the BOE, and other central banks?
Um, I I would think so, because, like, if I had to choose, yeah, because I just don't see how um debt could be repaid. Like, I just don't, the math doesn't add up to me. Like, just Japan, for example, if Japan's kind of a glimpse to the future, you're talking about, uh, an aging society that is becoming, so, like, debt to GDP is rising, debt burden is rising. You're getting less tax receipts. You're getting more people dependent on, becoming a weight on the government. I'm not saying that there's anything wrong with that or whatever. Like, I'm just saying, like, that's just how it is, right? And so, where's the productivity, where's the tax revenue going to be generated from? If you could tax Japanese at 100%, you're not going to be able to keep up with it. So, that default is going to have to happen, and I don't see how other major developed economies are exempt from that are following the same directional path. Even pre-COVID, was kind of that directional path that really shoved things
Yeah.
further. So I think that it may be in order to kind of have avoid some sort of just mass chaos. They would probably just do a Plaza Accord type of thing, like or a Bretton Woods type of, just a general gathering of the major economies, a global reset, if you will, so that it's not one happening, like one explosion here and there and happening like kind of randomly, sporadically. It would be more coordinated. That's the only way I can kind of see it happening, but that's the eventual outcome I would see, rather than my generation of millennials and Gen Z being able to pay back the amount that is being put on the credit card.
Yeah, I know you're a trader, so you probably look at more short-term, strategies. But just before we wrap up, maybe you have some idea of where the viewers, and this wouldn't be financial advice, just what you're thinking, the best way to protect themselves in such an environment of, rising debt, low yields.
I mean, you would have to, in that scenario that I painted, you would have to own hard assets. You have to own the gold, silver, land, property, cryptocurrencies, what like things that are not tied to the current monetary regime. Um, I mean, you should own them simply. It doesn't matter if you like what your view is on gold, like is like a pet rock or whatever. Like you need to own things that for the sake of monetary diversification.
Yeah.
Like you can't be concentrated in one monetary system, and so something like gold would be, well, it's had quite a history of sticking around, so that would not, be like that. That would probably be an attractive asset, and by attractive I mean like a true safe haven, right? Like people don't really are not going to flood into it out of greed, but out of fear and panic, really, but yeah, I mean, if like if money is printed all the time, and currently it is, and people don't seem to mind for now, but that's going to come to a conclusion at some point. And I would think that hard assets is how you would. This is not like a trade. This is like just
Survival,
asset
I guess.
survival, right? Exactly.
Yeah.
Yeah, yeah.
Yeah. So yeah, that it was really great speaking with you, Weston. Maybe we could speak again when you come after you come out with your end game video. Maybe we could go over that as well here on the channel. And thank you again. And any final words?
Sure. Sure. It's my pleasure. No, I mean, I guess like for in the immediate term, like you really just again, I know this is something you already had very kindly emphasized as well, but I just want to reemphasize: you really do have to pay attention to the Bank of Japan. It is not some background central bank. It is highly consequential. Just because it's not covered in the Financial Times and the Wall Street Journal, whatever, it doesn't mean that it's not consequential. It is extremely consequential. It is the central banker's laboratory. So please keep your eyes on the Bank of Japan. And yeah, Mario, I'm happy to throw my wacky ideas out there and then have you pull me in check and rediscuss.
Yeah, and just before I finish, I'd just like to tell the viewers that they can find Weston on Twitter at Across the Spread, and there you'll find where his blog as well. Yeah, at Across the Spread on Twitter. Uh,
Yep. And then just on Real Vision,
oh yeah.
Real Vision's YouTube channel is where I do that's the bulk of my work. So just follow that
Yeah.
as well. Yeah.
Great. Yeah. Real Vision YouTube channel. All
Yep.
right, Weston, I'll let you go now. I guess you're probably going to go out for a drink or dinner. No.
No,
Okay.
no, got work to do.
Good.
Yeah.
Take care.
Thanks so much.
You're welcome.